Hey guys, welcome back. In this video, we are going to start with the partnership accounts chapter, and the first concept under partnership accounts chapter is P&L appropriation and capital method. Okay, P&L appropriation is subsequent table of P&L account. Okay, we'll see capital method. Okay, what does it mean by P&L appropriation? P&L gets balance from net profit, right? Net profit from P&L account. With this net profit, we'll be paying salary to partners and interest on capital, interest on loan. All these will be paid out with this net profit and balance. If there is any profit, partners will share. Okay, this is the sole purpose of this profit and loss appropriation. What does it mean by capital method? Okay, after P&L appropriation, we can show the capital, partners capital in the separate column or combinedly with all these transactions related to partnership firm. Okay, let's quickly start with fixed capital method and fluctuating capital method. Okay, fixed capital method is capital account is fixed. We should not change any items in the capital account, which is if we have a opening balance, there will be only closing balance. If you are adding any further capital, then it will be take place in this account. That's it. Or withdrawn any capital that will take place. Other than capital related items, nothing will come to this place. All other items will be go to current account, partners current account. Okay, they'll have a separate account to deal with all the other items, all the other transactions. If it is capital account, the transactions will be related to only capital accounts only. Okay, fluctuating capital is they use only capital account for all the purpose. Here capital account usually used for capital account used only for the capital related inclusions and capital infusion and capital removing from the business form. If it is a fluctuating capital, we are using capital account as a general ledger, and we can show the salary account to the salary paid to partners, interest on capital we paid, and interest on loan, whatever we have in our partnership firm, we can show it under capital account. So that's the difference of P&L fixed capital and fluctuating capital method. So have brought you one problem. This problem covers the P&L appropriation as well as the capital method under fixed capital. We'll also work it out for fluctuating capital also. Okay, let's quickly start with the problem. Let's erase this. Yes, okay, shall we start? Okay, there are Ram, Ragim. Okay, capital they infused in businesses 50,000 and 30,000 on 1st Jan 19. Ragim is entitled to salary of 400 per month. Interest on capital 6%. Interest on capital and drawings both 6%. Okay, we'll take this here. Okay, and then Ram withdraw drawings. How much they withdraw from business? 8,000 withdrawn by Ram and 10,000 withdrawn by Rahim. Okay, profit for the year is 30,000. So this is the informations we have. We are going to prepare the P&L appropriation. Okay, P&L appropriation account and capital and current account. Okay, what's the P&L balance? What is the net profit we brought forward? Here net profit we brought forward is 30,000. Okay, the firm is also receiving interest on drawings 6%. The firm is also paying interest on capital 6%. So we need to find out the interest on drawings. So when say they have not given the drawings period, so we'll take the drawings interest as in general that they have evenly drawn. So there is a rule that in drawings withdrawal, if the partner is okay, let's minimize this and tell you about the interest on drawings. Interest on drawings charged when drawings on every first of the month or every 15th of the month or every 30th of the month. Okay, if the drawings drawn on every first of the month, then 6.5 divisible by 12 is the value we have to enter. Okay, if it is the every 15th of the month, then we have to enter 6 by 12. If it is every 30th of the month, then we have to enter 5.5 divisible by. Okay, these calculations are just a average of every month. Okay, if it is 6.5, then they have started from 12 plus 11 plus 10 plus 9 plus, and it goes till 1 and divisible by 12. What's the amount is 6.5 by 12. So same goes for every year. It starts from 11.5, 10.5, 9.5, sum of all these numbers, and they have arrived this value. So this is how they have arrived the value. If the interest on drawings withdraw, if we are calculating the interest on drawings withdrawn date is not given, we have to assume that they have evenly drawn, and the value and the factor calculation factor is multiplier is by interest on drawings RAM withdrawn 8,000 into how much percentage we have to pay? 6% interest. For the multiplier is 6 by 12. Okay, same like Rahim has withdrawn 10,000 from business, and the interest on drawings is 6% and 6 by 12. This is the even factor, so we have multiplied that also. So the interest on drawings is 8,000 into 6% into 6 by 12, which is 240. For the interest on drawings for RAM, 10,000 into 6% into 6 by 12, which is 300 for Rahim. So we have to receive these interest from Ram and Rahim. So what else we have to pay to them? We have to pay the salary, right? Salary to Rahim. Okay, what's the salary? 400 per month. 400 into 12, which is 4,800. Okay, what else? Interest on capital. Okay, we have to transfer this balance to Ram's current account. Why we are using current account here is we are working this out. We are working this problem out under fixed capital method. So under fixed capital method, we should not use fixed capital ledger for all these other entries. Okay, all these other entries we are using current account here. Okay, for interest on interest on capital to Ram's account. I think this is Rahim. Rahim is getting salary, right? So, okay, to Ram's current account. How much is the Ram's capital? Ram's capital is 50,000 into 6 percentage. 50,000 into 6 percentage is 3,000 is the interest we have to pay to Ram. What's the Rahim's interest on capital? Okay, Rahim has invested 30,000 into business. 6 percentage comes around 1,800. Okay, 2. Any other items given in the question? That's it. Drawing over, capital over, and salary over. So that's it. We have to transfer the profit to Ram and Rahim account. So partner's current account to Ram to Rahim in the ratio of what's the profit sharing ratio? So they are distributed equally. They are distributing the profits equally. So 1:1 PSR. Okay, 1:1. So how much is the balance? For 30,000 plus 240 plus 300 minus 4,800 minus 3,000 minus 1,800. 20,940 is the profit into 1/2 into 1/2, which is 10,470 is the profit accumulated to the capital accounts. Okay, now we prepared the P&L appropriation. Now we have to create the partners capital account and partners current account. Okay, what's the capital of Ram and Rahim? Ram and Rahim has started the business with 50,000, right? 50,000 and 30,000 respectively. Ram, Rahim, Rahim. Okay, Ram has invested 50,000. Rahim has invested 30,000. So at the year end balance carried down, which is 50,000. Though there is no capital withdrawn, so we are transferring the same balance to the debit side. Now we have a partner's current account here. Partner's current account is solely the expenses and incomes of partners covered here. Okay. Now what are all the incomes transferred to partners current account? Ram, Rahim, right? Okay, what are all the incomes transferred to partners account? So these are all this is the expense for the partner, and these three line items are, which is salary to Rahim and interest on capital to Ram and interest on capital to Rahim. Okay, so by P&L appropriation account to salary for Rahim 4,800, interest on capital which is 3,000 and 1,800. What's the profit share? Profit share, which is 10,470. Okay, these are all the incomes out of the current year. And what are all the expenses they made? By interest on drawings for 240 for Ram and 300 for Rahim. And they also withdrawn some amount from business, right, by drawings to current account. Sorry, these are two drawings. Okay, two interest on drawings. See, income for the sorry, this is the income for the firm, but these are all the expense for the partners. Okay, now what's the drawn amount? 8,000 done by 8,000 withdrawn by Ram and 10,000 withdrawn by Rahim. Okay, and here we should not enter interest on drawing. This is P&L appropriation account. Okay, interest on drawings to balance carried down. It's the balance figure item, which is 3,000 plus 10, 470 minus 240 minus 8,000, which is 5,230 is the current account balance. Okay, then 4,800 plus 1,800 plus 10, 470 minus 300 minus 10,000, which is 6,770 is the current account balance. So this is the P&L appropriation and capital under fixed capital method. Okay, this is the P&L appropriation and capital method under capital account method under fixed capital method. What if it is fluctuating capital method? If it is fluctuating capital method, we are not going to prepare these item and all. We are just prepare the partner's capital account and just merge these both items. Okay, just like that. We have a here we have Ram, Rahim, right? Ram, Rahim, Ram, Rahim. Okay, they have invested rupees 50,000 into business and 30,000 by Rahim invested into business. And what are all the incomes they have earned for the current year? P&L appropriation account. So just we are merging, that's it. Okay, salary, interest on cap, profit share, 4,800, 3,000, 1,800, 10,470, 10,470. To P&L appropriation, which is drawings, interest on drawings, right? Yes, interest on drawings. Here also we have typed it as wrote it as interest on drawings. This is partner's current account. Okay, we should not change the name like this because the name should match with the other items. Then only the entry will pass in a correct manner. So the partner's current account is the appropriate name for the entry. So P&L appropriation, which is the interest on capital, is 244 Ram and 300 for Rahim. Okay, then what else we have? Drawings withdrawn from business, which is 8,000, 10,000. And then what's the balance we have? Here we have a difference balance carried down amount, which is 50,000 plus 3,000 plus 10,470 minus 240 minus 8,000, which is 55,230. Just this is the inclusion of capital plus current account balance. See, you can see that capital is 5,000 and current account balance is 5,230. So 50,000 and 5,230. Same goes here. Okay, they have a balance of 30,000 plus 4,800 plus 1,800 plus 10,470 minus 300 minus 10,000, right? So 36,770. Same cap current account. That's it. We are closing the video here, and a very easy problem. This one problem is enough for this concept. We'll see some other problem for goodwill and for admission in subsequent days. Thank you.